All right, guys, we're back again with another trade breakdown. I'm currently outside of my house, but if you hear birds chirping and all that other shit, it is what it is. It's a beautiful day outside, so I figured I would just do the trade breakdown out here. So, we're going to do an entire walkthrough of top-down analysis as to how I came to the conclusion of my Euro shorts. And also, sorry if I sound ridiculous right now. I just had like double needles of Novocaine pumped into my mouth to get cavities filled, and I sound and feel ridiculous still. But bear with me here. So, anyways, let's get into the trade breakdown and how we came to the conclusion of the Euro shorts. So, we had a weekly external range run here of this high on the Euro. We've been bullish for quite some time, so we need some relief. We need some pullback into some sort of bullish PD, right, to continue that bullish sentiment on price delivery. So, the most obvious idea for me to look is for Euro to reach from this external range run to this internal range liquidity pool, because price does what? We rebalance imbalances and we take out old highs and lows. So my eyes were drawn to this internal range liquidity pool, and I even said it last night. I sent a screenshot to my group of the daily or of the weekly IRL and the weekly IRL for the dollar index. Now I'm going to show you dollar index here. This was my analysis going into the day before you even had all the price action delivered for New York session. But let's go to the weekly chart right here. Dollar index, let's like clear all this stuff too. Dollar has done what? Run major sell side liquidity pools, all resting below here. And we go to the monthly too. It's inside of this monthly bullish for value gap that is below this external range low here. What did we do? We tagged we ran an external range liquidity pool. So now what does price need to do next? Price should be reaching for an internal range liquidity pool, which is this internal range weekly bearish fair value gap. So that was the sentiment going into the day and the week, knowing that dollar has already ran the sell side liquidity. Now it needs to rebalance and imbalance, which is this weekly gap here. And same thing with the Euro, which is this weekly bullish gap here. So I'm just making sure that my dollar index matches the analysis with the opposite draw of the Euro. So that was my weekly analysis. Now let's go down to the lower aligned time frame, the 4 hour, and let's go and see how we had structure here between GBP and the Euro. Now, if we look at these relatively close and we can compare the two, at this resting high here is where we already identified weakness between the two. What do we have? We have SMT set in between the highs from Monday and Tuesday that we set in during the London sessions. So Euro made the lower low and GBP made the higher low, and then we sold off lower. Now, going into today's price action, Wednesday, with our first day of the week with high impact news, I'm looking to continue in the bearish direction in the sentiment that we got given to us from Tuesday. So with the confirmation of dollar wanting to go higher to that weekly bearish gap and Euro wanting to go lower to that weekly bullish gap, I'm automatic the whole time. My sentiment just going into the days to looking for trades are just shorts. So the weekly objective for me is 112.642. Now let's replay price, see how we got to the point where we were looking for that low resting here, the daily objective point. Now, if we did our analysis on the weekly, we're doing our analysis on the 4 hour to match that weekly bias and that narrative build. What did price tag here during London session? Now we tagged this 4 hour gap on the Euro. Now we're looking at a corresponding gap on GBP USD. That corresponding gap is right here. Now what do you notice? We have a lower high on GBP here, and we have a higher high on the Euro here. So we have SMT divergence now set in on the... Bro, this is actually insane. Like, I literally had to go inside because there was a plane that flew by. The ice cream truck just came by. Like, oh my, I can't record a video outside. The first 5 minutes of the video was okay. But anyways, 4 hour bearish fair value gap with SMT divergence set in. Now I know this resting high here with SMT is protected. Price should not go back above here. I know that price should not go back above this resting high because there's SMT. Now, going into the trading session for New York, I know that this 4-hour high that created SMT inside of a fair value gap should not be traded into. Same thing with this resting high here on GBP USD. So if I have my protected high set in, I have a confident way of looking to frame my trades going into the New York session. So looking at this 4-hour to 15-minute gap, let's go to that and look at the aligned lower time frame. So in this situation here, I was looking to wait for price to reach and trade below this down close candle resting here. And you're asking, Matt, why not wait for this down close candle, or why not wait for the closure below this down up close candle? Because this up close candle did not run a short-term high or clear any liquidity, so it would not be an order block to me. You could have gotten in on this order block resting here because it did run this short-term high, but it's technically relative equals. But I wanted more confirmation before I would even be able to execute anything based off of the previous performance from dollar's behavior. So breakers would be the heavier confirmation piece of execution for this idea of a trade. So I'm going to play out price and show you exactly what happens here, because we also had 9:45 news. So I also wanted to wait for 9:45 news to come into play before I would even put on an execution or lay on risk in the marketplace. I'm being very cautious when it comes to me actually taking an execution. So here's our news release. Now look at the comparison between GU and EU at this corresponding high here. We have a lower high set in on the euro, and we have a higher high set in on the pound. So now I have more SMT built en route to my sell side liquidity pool objective point. Now, you're asking me, why is that significant? Because it is giving me a better risk to reward in regards to a stop loss placement that I could take for my execution. Because if I wanted to execute off of this breaker here, and I wanted to put my stop loss at the SMT high from the 4-hour gap tag, that's all the way up here. And if I put my TP all the way down to the bottom, it's only a 1 to 2 risk to reward. But if I create SMT divergence en route to that take profit, I have another protected high that I could use and label to then put my stop lower to get a better risk to reward. Now in this situation, I was able to put my stop at this resting high that created the SMT, and then my final take profit being the external range low here from that 4-hour IRL tag. So I alerted to my group that I'm going short at 113.798, and then we can see what happens when price comes up. Tags us in right here. Now at this point in time, we get in at 10:15, and London close is at 12 o'clock. So let's get to the London close at 12 o'clock. 11:15, here's 11:30, 11:45, 12 o'clock here. So this actually pulled a forever model execution from my indicator. Now it's referencing this 4-hour gap here and showing you the up close candle that actually cleared a short-term high and then closed below, labeling another execution for a pyramid entry. But at this point in time, I already ended my stream and I told everybody, set and forget the position, go about your day, and whatever happens, happens. Accept the risk. We did everything that we could. We did all of our analysis. So whatever the outcome is, it doesn't matter. But you could even see here, price played out perfectly. It just obviously took some time. We respected that 15-minute bearish order block from the forever model indicator, giving us that execution for the pyramid entry. But the original from the breaker execution literally top ticked it with no drawdown. Literally, look at the wicks just doing the damage. The body's telling us the story. We framed our narrative from the weekly to the 4-hour to the 15-minute for an execution, keeping us on the proper side of the market. This is exactly how you should go into the day. You should be mapping out your narrative. You should be creating a plan, and you should be executing based off of that plan that you made before you went into the live trading. Now, price action definitely has been harder than usual, but it doesn't matter if it's hard or not. The only thing that should be mattering is the fact that you're repeating the same process that you know works through your back tested and collected data through your journal. Because you could take and you could be on a hot, like a ice cold losing streak, but all it takes is for a couple of trades, if not one or two, to recoup 2, 4, 6 losses that you just took previously. All that matters is that you keep on showing up and repeating the same process over and over and over again. You're not going to be on a hot winning streak forever. And this is why I want to show you guys like the reality behind trading. Like, not every single day is going to be a winner, and not every single day is going to be a loser. It's just a matter of playing your cards right, knowing your edge, and executing when you know your edge is present. Now, I hope you guys enjoyed the video. Hope you learned something new. But like always, good luck, good trading for the rest of the week. And I will talk to you guys next time for the next upload.